All right. Hola, guys. ¿Qué pasó? How's everyone doing? This is Jalapablo. Thank you for tuning in. Let's skip all the introduction formalities and get right to Bitcoin because that's why you clicked on this video, right? All right. Without further ado, now we're going to continue using these two charts, which we have been using now. And as we've noticed, Bitcoin has been following these trajectories almost like a child's book, connecting the dots, tracing over line to line to line. If you could superimpose these two charts on each other, there would be such great similarities, a little bit of deviation here and there, like where this UT dropped. We had this straight drop that we had back on December 5th. There was something that necessitated this kind of pullback, which took us all the way back down to the AR section to mitigate. Whereas back in 2021, the UT area from the second drive on this three drive, didn't fall quite as extravagantly as you could see. So there are little, differences, little variations here and there, and discrepancies, but for the most part, it's almost cookie cutter. Like you said, you could superimpose one upon the other, and so that's good for trying to determine the future trajectory of these waves. More or less, we can expect, since they've played it out this far to such a great degree of similarity, we can only expect that the rest will play out more or less in a general fashion. So here we are. This is today on the right hand side. This is the 2024 bull market. I'm tempted to label this as bull market A because, as we're going to see, this is just one distribution of a cycle of two. So as you see, like when we play the bars for 2021, we're going to see that we distribute. This indeed is an ending diagonal three drive distribution. I mean, there can be no doubts about that, right? You have the buying climax up thrust and the up thrust after distribution, forming an ascending wedge, as it were, which is on the macro bearish. And then we have the series of LPSYs, last points of supplies, as the price marks down through structure, breaks structure, mitigates the automatic rally point, and then comes back up, and it finds that the micro trend support line has now become resistance, and it bounces off it, fails to rally, which constitutes the top of the B wave in the ABC macro correction. And then from there we have an elongated C wave. Now, as with everything, the C waves don't come straight down in a straight line. So, and this incidentally is on the 12-hour, and this is a 2-hour on the right hand side. So this is going to be much more condensed, much more defined in the waves and the flats and the zigzags. So, but more or less, it's basically taking almost the same exact cookie cutter trajectory. So we see the rejection off the macro trend support line, and then here we're seeing the same thing this year where we are right now. Even it's on the 2, we could see it. We have a clear rejection off the macro trend support with volume confirmation in the vertical bar, supply volume building. So that tells us that the value of Bitcoin now has no more value above this area, above the 99,000. 100. We'll just say, for the sake of simplicity, 100,000 Bitcoin. Now the value has dramatically decreased, and so we see this by building supply in the vertical bar. I don't know if you could see that down there. These two spikes. I don't know. When I go down here with the mouse, these features show up to change the screen size. That's like a feature on TradingView. I can't do anything about it, but you could see it down there. So, and then we saw it here also back in 2021 with the building supply in the vertical bar, the increasing supply. So that shows us that indeed this is not a fake out. The Bitcoin actually has no value above this line. And if it does happen to pump above it, I don't expect to see a lot of demand. That could very well be a bull trap in preparation for the C wave sell-off. Kind of like what we saw here. So we came back down here. We'll go back to 2021. We came back down. As we saw here, the price, after being rejected, came back down to the A, to the A wave, which is also incidentally the mitigation point for the automatic rally we saw at the beginning of the wedge. So we have a mitigation. In this point, we could call it even like a triple mitigation. You know what? I'm just going to use a brush at this point. So we have the first one here, and then it remitigates here. So that's like a triple mitigation on the B wave. And then if we play these, we're going to play the waves for 2021 and see how it transpired from here. Now, if you don't understand pattern recognition, you could think that this A wave right here is the beginning of a gigantic double bottom. So like, in other words, like this will be the, you know, the A, the B, and then the C will come down basically to the same area and then mark up and actually mitigate the UTAD and then put up another leg from there, in effect creating a double bottom. But we see that that's really not to be, quite simply because there are a lot of unrealized gains that have to be realized at this point from the massive pumps that Bitcoin has had even before the Trump pump in November. Bitcoin had rallied quite abundantly from the months previous, and so it had a lot of unrealized gains from that point. If we go here, I could show you. Let's get rid of that. See, this is the Trump pump, but even before that, we had rallied up from way down from 16,000 that have basically been unanswered gains. We haven't really seen a sizable correction for over a year now. So Bitcoin is due a macro retracement. But I don't think that this is going to be the macro retracement. The one that we're looking at right now is not going to be what we're looking for. I think it's going to retrace, as we're going to see, as it retraced in 2021. But it's not going to retrace, I don't think, more than 50%. I think, well, we'll go ahead and see how it all played out here. We'll exit this because it's not going to let me play it. Let me go back here real quick, and then we'll play it out. It always does this. It's so capricious, this playback of the bars. So, all right, so we're back basically where we were. So we'll just redo it, replay. Yeah, that's good. So we'll replay, say here, right, is where it's kind of identical, right? Wouldn't you say that these look sort of similar at this point? Yeah, so you have the B wave coming down. It touched this liquidity void zone to mitigate the AR once again. So we'll play it from there, and it's not doing it again. Okay, well, let's see. Here we go. And so we see we come back down once again to the AR, but see, we've already mitigated the AR, so now it drops down to the second liquidity void area, which is found right below the PSY. And so that would be this area here where we are, and that's the $85,000 range. And like we talked about in the last video, this is typically the area after you have an ABC correction on the macro on a distribution bull market, where the price begins to reconsolidate, where the value, you know, either an absorption campaign begins at this point, or they're fixing to redistribute and bring it down yet another leg. We see in this case, I don't think Bitcoin is going to do that this year. I think Bitcoin is going to do exactly what it did in 2021 and reconsolidate in this C area bottom and create, as it were, a selling climax, and then you would have the automatic rally here, and then the secondary test, and form, as it were, a whole new lateral trading range. In this point, kind of like this sweet spot area between these two liquidity voids, that would bring Bitcoin down to this area somewhere in here in the $80,000-$85,000 area. It could actually go down even further, according to Elliott wave. We could see an even deeper retracement. Does it have it on this? No, the Elliott wave isn't showing on this, actually, the retracement. But I've seen the retracements going all the way down to like the 60,000, 70,000. Indeed, some analysts are calling for retracements into the 70s. I'm going to start setting my limit buys around 80, 86, 85 to pick up Bitcoin around that area. As far as I'm concerned, if I could pick up Bitcoin anywhere in the 80s at this point, it's a bargain. So that's why I'm definitely not buying up here. Now remember, we talked about this is a 12 hour and this is a 2 hour. So in this 12 hour, it's very condensed. You have basically 6 of these candles, right? So we could very well see another attempt at the macro trend support line. So this could come up like this again and do another attempt here, and have like a 3 or 4 attempt drive at this, to prevail through this LPSY area. But I think ultimately it's going to fail, and we're going to see what happened here. We're going to come back down into this area. We're not going to linger here long because we've already mitigated this point. In fact, we mitigated it 3 times with this event here where it wicked down from the UT back in early December. So I don't see us hanging out here. I see us falling, basically a free fall all the way back down to the PSY liquidity void area, and then consolidating down here for some time. And I think it's going to be an accumulation. It's going to be a bottom, like this is here, a clear bottom. See, one of the questions is, like once we macro distribute, is this going to be a redistribution, or is it going to be a bottom? And we talked about it in the last video, why this is a bottom. You see how the tight consolidation here, the spread tightens at the end of the range. That's very important. Not the beginning of the range. It's the latter half, the C, the D, and the E portion of the Wyckoff range, preferably under the 0.5 Fibonacci line. And then it goes back down for one last spring. You see this mitigation here, and then we have the retest at the LPS, and then the markup, which it's doing here. And what the price is doing at this point, it's seeking to basically do the inverse of what it did here, and it's gonna be mitigating the LPSY liquidity voids now, and then ultimately the UTAD, or the former ATH, the all-time high. So that's what we're seeking, and I think that's what we're going to see, something similar to that here. It's just a question of how far down we retrace with the FOMO. I've heard different things from different people. That's why it's good to read the news, and you use the news sentiment as a catalyst for these sorts of things. But certainly, I think that there is a macro sell-off on the books, and when I say macro, it could bring us down beneath the 80s. But just in case I'm taking profit, I'm going to be picking up Bitcoin in the mid 80s, and if anything lower than that is, you just keep buying. Now, not financial advice, but that's what I'm doing, and then keeping my eyes on the alts, because I'm looking for definitely a pump after this short period of reconsolidation. And then we're going to be going back up into the 90s and into the hundreds. And then that's when I see that's when I can kind of forecast going above the all-time high, maybe going up into $120,000-$130,000 Bitcoin, kind of like we see what happens here. I think we broke the all-time. I think it created another all-time high in this next cycle here. So certainly, yeah, this would be the new buying climax, the BC here. And then we start another lateral range. And I know that we distributed eventually. This was another distribution area, kind of like this. But I don't know if we had a UTAD for this one. I can't remember if the UTAD prevailed, 64 grand. I don't know. But it doesn't matter. We're going to see it doesn't have to play out exactly like it, and it would be folly to think that it would, and to go off that. See? Okay, see here? Yeah. See, we had this, and you see not a lot of demand. That means that this is it. This was the big one, and it's down from here because despite all that pumping, we had supply instead of demand, and then sure enough, you see how it distributes from there. But before that, it did another UTAD, and this UTAD hit 69, almost $70,000. So I think we're going to see that on this round as well, something like that. Maybe not cookie cutter, but something similar. The way it's played out so far, we could just we can sort of anticipate that to to various degrees. And then if the UTAD here was $108,000, maybe we could think of like 115, 120,000 before the blow off, and then the deep. This is the deep one now. The deep retracement that takes us all the way back down to, I mean, like this one fell all the way back down to $16,000. So yes, there is a macro retracement coming, but possibly not after another breach of the all-time high. But first, we're going to reconsolidate. We're going to grab some liquidity down in the 80s or 70s before we pump back up, and then we could look at the 120,000, something like that. Maybe breaking the all-time high sometime, maybe in the summer or spring of 2025, early summer, late spring of 2025, and then the macro retracements back down to well, I don't know, 60, 70% down or something like that. Because like these gains are unrealized, and you got to pay the piper at some point. It's just all part of the game. It's cat and mouse. All right, guys. And with that, I'm going to sign off. Like, subscribe if you're getting anything out of this technical analysis. No nonsense technical analysis. I try to tell it as it is, and hopefully get something out of it. If you know someone who needs help with their tradings, just starting out, direct them to this channel. Let them know. It's good for, traders when they're young to learn how to trade the right way before you start picking up all these bad habits where you need indicators everywhere and all kinds of stuff cluttering your charts. An abundance of indicators just means that you don't know what you're doing usually, and it's you're doing hope trading at that point. So we want to avoid all that. We want to trade without emotion. We want to trade like smart money. We want to do what smart money does. We want to buy when smart money buys. We want to sell when smart money sells. We want to mirror them because we don't have pockets as deep as them. We can't beat them, so we join them, right? And that's the mentality behind Wyckoff. That's the mentality behind volume spread analysis. That's the mentality behind Elliott wave theory. And that's what I endeavor to show and convey on this channel. So hopefully you got something out of it. Like, subscribe. None of this is financial advice, but you already knew that. All right, guys, I'm going to let you go. I'm going to drink some more coffee, play with my kids, watch some TV. And yeah, if anything else comes up, I'll be sure to shoot you a video. Check out our Discord group if you'd like to take your trading up another notch. It's through Patreon. The link should be in my on my profile on YouTube. But I'll try to leave one in. I'll try to pin it in the comments since people have been asking. For some reason, they can't find my trading group link. So I'll go ahead and do that. All right, guys, that's enough for me. Be safe. God bless. Adios. Bye-bye.